Atul Suri is now joining us, CEO at Marathon Trends-PMS. He's with us here in our studios. Atul, great to have you with us here. Good morning. Thanks very
nice
much.
To be here. Thank you.
Yeah, it's starting. I mean, it's we'll talk technicals, but the news flow you can't ignore either.
There's a lot that's going to keep you busy for the next 1 month.
I'm not talking about yields or rates.
Are you able to follow the posts and the memes?
I'm not talking about rates or yields or commodities. I'm talking about Greenland, Canada, Gulf of this. And
you have an exciting job for the next 1 month. See, for 20th, you've got the whole
next 1 month or 4 years?
4 years is a long. Then you talk about the Amrit Kaal. Let's talk about then 20 years.
How is it looking, Azul?
So I think that the next 1 month is definitely going to be very volatile because you've got three very big things I think that are panning out. One is this whole Trump trade. And already you can see that the world is shaping up for it. Bond yields have taken off. What's happened to the dollar is, I think, the biggest elephant in the room. That's affecting markets world over, whether we talk about it or not. Then you've got budgets, always unexpected, unknown. You don't know what's going to come out. And then you've got your corporate earnings, which actually is the biggest issue in our markets for the longer term sustainability. So within the next 1 month, you're going to have three such very big events, all three very unpredictable, a lot to talk about. But I guess, you're going to see volatility. But I feel beyond that, markets will settle up. So trying to, sort of make a call for one or two of these events is going to be difficult because, I mean, how will you pan out for this Trump trade? What is he going to do? What is he going to say? Which side of the bed he gets up from? I mean, these are things, where the best and best can't. So for us, I think it's more a question of reaction.
But directionally, Atul, is it looking,
So what I think, Prashant, that already the world is factoring this in. See, if you look at bond yields, right, the US 10-year, it's a very important instrument. It was around 3.6. Trump won the elections. It's moved 100 bips. It's at around 4.6 or so. An asset class which seemed to be sliding down because inflation was so-called capped, suddenly has taken off. What has happened to the dollar? Very important asset class, especially for risk on, risk off. All these FI flows. Why do FIs selling? Why are they this? It's nothing that they don't like India or it's a big deal. For them, the whole thing is we are just part of a big puzzle that there is playing out. And the way the dollar index took out from 107 heading to 109, that again tells you that the world is gearing up for inflation. See, because if you look at most of Trump's policies, whether he's talking about tariffs, whether he's talking about border immigration controls, whether he's talking about tax cuts, they tend to lean towards a higher inflation. And that is why markets are already factoring in it. Now, what comes out, how much does he posture, how much is just saber rattling, this only time will tell. I mean, as I said, we have no capacity to judge that. So I guess this is something that is going to play out. As I said, it's going to be very exciting. But how can you prepare for such events?
But again, directionally, just to, जैसे बोलते हैं, ऊपर का घर बंद है कि?
No, I think that the market will surprise. In fact, what happens is that, see, right now we are at very important, very near crucial supports, which is your, I think, 23,300 or something, which was the last bottom. So that is one area which in the short term can be an issue right now. We're at 23,700 thereabouts. So that definitely is an area of concern. But sometimes you feel, the breakdowns happen and suddenly the market has ways of pulling up. And on the upside, if you take out at 24,850, I think I remember was the last high. If that gets taken out, then you make a case for a new high. So I feel that in this period of lot of news, if the market just remains in this band, good day, when you start feeling bearish, the market takes off. And when you feel bullish, the market is going to, which is a typical range-bound movement. I personally would favor if something like that happens. Yeah, the bigger risk is if the breakdown happens. Because, remember, we are nearer to the lower band just by 2% or thereabouts. Then I feel that, it can lead to more.
When you said markets may surprise on the upside or the downside?
No, I feel that at the moment there's a lot of pessimism, Surabhi. At the end of the day, people are worried, ye hoga, wo hoga. There's a lot more bad news. So that's good if the bad news is getting absorbed, it's getting factored in. And that is why even if you see the markets, they are not at lifetime highs. They are good 10-12% from there. We've spent a quarter or so of nothing. In fact, last 6 months, you'll realize that, if you look at it, there has been no substantial really gains. Yes, the markets made a new high. But portfolios, stocks, all the leaders are all off 20%, whether it's your defense, your PSUs, your private sector banks, barring IT, if you see. Most of the sectors and stocks are off 20%. So things have cooled off. Time has been spent. 6 months have been spent. Price has come off 15 to 20%, maybe 12-13% on the index also. I think that is important.
But Atul, before we start talking about what to do here, just complete that point on the two important indicators, both the US 10-year and the dollar, because now on the fundamental side, suddenly we're hearing, for the first time, narratives about maybe there is a global recession coming, maybe the US economy is going to, all of that.
That should be, you will keep hearing. Recession, we've been hearing since 2 years.
Exactly.
One month it's inflation, second month it is recession. So that all is one big thing. But I said the two things that really matter to us as people in the markets, and these things are very, very solid indicators, is where the dollar is headed.
But what do you see anything?
Yeah, so a dollar at 109 is not a pretty space to be in. It's honestly not. I would rather have the dollar at 107 or below. That's the range it had set out for 2 years. We'd rather have a dollar there where we don't have to bother about it. Today, we have to be bothered about it because remember, when the dollar goes up, it leads to a risk-off trade. Like, we are getting shocked. Why FI is selling so much? As I said, it's not that they can't see the big India story. It's that they have multiple pressures. They are dealing in multiple asset classes, these whole global macro players, and what is the impact of the dollar, what currency they borrow in. And when US bond yields are going up, when they are getting at US interest rates at that price, then the need for them to be more adventurous and come to emerging markets where the risks are higher is less. So money is moving to the US, and that is very, very visible. Not a pretty place. It's been difficult. And I do think that the next 1 month is going to be challenging. A lot of news, but you just have to wait it out.
All right. Hi, Atul. Always good to see you. So next 1 month could be challenging. But for the year on the whole, sometimes when you get a lot of pessimism, it's actually good news.
Absolutely.
Because then, in fact, you expect the markets to be absorbing this and then gradually move up. For 2025, do you expect the markets to give a high single-digit return even from these levels? That's point number one. And point number two is, that's provided obviously the global markets don't collapse.
No, why single digit? Why?
I mean,
single digit is like, then an FD would be a good idea.
I'll tell you, Atul, from the kind of market talk that we've been hearing for the last couple of weeks or so, uncertainty on Trump, the dollar index, as you mentioned, 100, if someone gets 10% this year, they'll be quite happy. So give us the optimistic. The last time we joined, I think we were talking about late 20,000, but tell us what is the level for this year?
No, I don't know about levels, but I do think that the first few months are going to be challenging.
Yes.
Even for India, our macros have slipped a bit. Your growth rates have slipped. Corporate earnings are not as they were about a year ago. So I do think that this is going to be, but I do feel, again, it's a personal hunch that the government, whether in India, whether it's the US, these guys are very pro-growth. They are development. They are capitalist in their mindset. They want things to come up. They are not going to let this country economy just slip into a recession. They are going to put in the fight. So I do think that, right now, lack of government spending or less government spending is one of the biggest problems. I do think that they will come back. Whether it will happen in the budget or after that, we don't know. And that is why I feel that the recovery in the market will be more back-ended this year than front-ended. The next few months will have their challenges. As I said, it's very heavy on news. There is need for government action and policy, but I do feel it will come. And that's what, as you started the point, that when you are very pessimistic, that's when the seeds are sown. And as I said, that we've spent 6 months consolidating,
yes,
price-wise and time-wise also. Even price-wise, we're no way much higher than we were 6 months ago, right?
Yeah.
23,300 was the election day, I think, volatility high, and that is the support right now for the market. So we were where we were 6 months ago.
Atul, so let's talk about ways to look at how to. So we had Sandeep Tandon of Quant earlier with us on Friday. He was saying maybe one way to do it is, first of all, the call that large caps will do better. Many have been beaten down quite a bit. And big laggards of 24 should do better in 25. A simple kind of. And it's, I think Nimesh later in the day is putting out a piece on edit, I think tomorrow. On saying, just looking at this, and does this work by the underperformers the last year? Not all the time, but what's the hit rate? And he's looked at data going back the last 5 years.
There's a lot of study in the US that it's a trading system actually.
Do you think that is something to do here?
So I don't know about the buying the dogs of last year, but I do hold the idea that large caps will outperform. See, we do something called a ratio chart. I mean, unfortunately, I don't have it on screen today. But what happens is that when you do a small cap to large cap ratio, you will notice that there is a 3 to 4 year cycle. And if you look at it, large cap relative to small cap, since 2020, that's COVID, this has been the almost 4 years of relative underperformance. For 4 years, large caps have underperformed. And generally, we've seen that cyclically, these tend to be turning points. As I said, we don't know whether it's going to be this month or next month. That is very difficult to call.
Correct.
But yes, we are at extreme underperformance of large cap relative, these also become turning points. I'm not saying that please sell small and large caps. I think they will still have juice, but wherever the earnings will not support it, I think they will sell off. See, yesterday's market, if you look at it, yesterday the index was okay. It recovered. It was very pretty. But if you went and looked at the small and mid cap indexes and some of the stocks, there was a lot of blood out there. So what will happen is that optically your Nifty will look good, your market will look good, but in there the bleeding will happen. So I guess we are heading in that kind of situation. And in that sense of the term, it's also a better place to find protection in large caps.
So large caps.
Because what has not moved, where there's less euphoria, which is as it is beaten down, and if it's turning around. A case in point, a sector I love, Prashant, is IT. Right? I mean, a lot of people are talking about banks. There's consensus bullishness on banks, but I have not been bullish on banks, and I still am not bullish on banks. If I had to put my heart and hat in the largest to be overweight in any sector in large caps, it would be IT. Because if you look at some of the IT stocks, you'll find that a lot of them are pushing to new highs. And I think that is very, very exciting. IT is important because it's the second highest weightage after banks. Yeah. Because you need something to pull this market up. You need a heavy lifter. And I personally think large cap IT is a space I find very interesting.
So, Atul, to go back to your favorite line, right? The trend is your friend until it bends. Leave us with what you're seeing on the biggest trends of 2024. Now, and these stocks have already cooled off quite a bit from the highs, right? So, capital goods, industrials, your ABB, Siemens, defense, railways. Where all have the trends now broken down in these high flyers? And where do you think there's still a scope that, maybe you buy the dip and the trend resumes?
Yeah, I mean, two sectors you spoke about which were darlings last year, defense and railways, okay? Very similar in the PSU basket. You'll find that, yes, both got hammered. Post-election, there was a bit of loss of confidence in PSUs, but you'll find a lot of defense stocks have come back. They are nudging, they are pushing back, but railways haven't. So what you're seeing is very, very divergent trends that are playing out even among sectors and themes. Some themes that have continued to do well, things like hotels, continue to do well. In spite of the fall, they continue to make new highs. So I feel that there are going to be some themes and some sectors, but coming back to, the larger thing, what I was telling Prashant, that I also favor large caps. Okay. I also have a more bias towards IT, and there are going to be a lot of plays. Not that small and mid caps are not going to do bad, but there are going to be plays, and I feel that these quarterly numbers are going to actually be very divergent for many companies. Index-wise, it may look, as I said, like yesterday, optically it looked all is well, but inside there was a lot of damage. So I do feel that with this quarterly numbers, I think the market's going to get a little more bifurcated as to where the delivery of numbers happens. Well, they will all make new highs. Maybe the index doesn't. And wherever, so you will find a market where there will be number of 52 weeks high and 52 weeks low on the same day. And the index will be where it is, telling you that the market will be more divergent.
Absolutely, which is why I think we've been hearing this line that this is a year for the stock picker. It's probably not a broad brush stroke. You touch anything and it
As long as you
up.
Pick the right stocks.
As long as you pick the right stocks. Absolutely. Thank you so much and wish you all the very best for 2025.
Thanks a lot. Thanks,
Look forward to more conversations, particularly as we get through this very exciting month of January. So catch you once the inauguration is done.
Thanks.
All right.